So not every deal goes the way we plan. Okay, it's just a reality of the situation. So in this very short video, I just want to talk about some of the things that didn't go away that actually kind of went wrong, and maybe some of the lessons learned from some of these deals. Because it's I think it's not really 100% truthful to say every single deal we do works out. Every single investor makes exactly the amount of money that we hope they would make. It's just not true. So in this video, we're going to have some examples of what went wrong, what happened, and what we did about it, and maybe how it ended up. To help us with the conversation, however, in Director of Investor Relations, Bronson Hill. What's going on, Bronson?
Hey, Michael, thanks so much for having me join today. It's so happy to be here and excited to connect with all the passive investors watching this.
Yeah, this is great. I'm sure you get a lot of questions sometimes, and investors are very concerned about, oh my gosh, what could possibly go wrong? And we've talked about this on the video before about things that can go wrong just in general. What are we doing about protecting from the market? But I think a lot of questions you said, man, a lot of people say, hey man, does every deal really go like 100% correct? Does every go wrong? Like what has gone wrong? Right? Is that you were telling me the other day?
Totally. Yeah, I get that. I get that question a lot. People are like, well, tell me about your worst deal, or tell me about what happens in this situation. And it's always something you want to think about, because you want to think about, rule number one from Warren Buffett is don't lose money. So you want to think about what could go wrong, right? So why don't you tell us, what can go wrong, and maybe you have an example or two you can share with the audience, just as far as what has gone wrong.
Yeah, so Paul Moore, a good friend of mine, also multifamily syndicator, he's got a podcast called How to Lose Money. And I've been on there twice. and most of my money I lost in the restaurants, as some of you guys may know. But one of the examples certainly is my first deal, and I go pretty heavy on what happened in that first deal. It was a 12-unit deal in Washington, D.C., and in hindsight, literally, I don't know, I think more went wrong in that one deal than all the deals I've done since then combined. Like, it's insane, right? It's insane. It was such a nightmare. And it was my first one. And I was like, man, this is rough business. I don't know if I should go in this business. And so, long story short, really, it was a tenant that made my life completely miserable. And I was about to run out of money. We were losing money. He was suing me. He was not paying the rent. He was organizing the other tenants. And then coupled with the DC, the tenant landlord laws in DC are very, very pro-tenant and really anti-landlord. So it was very difficult. And we missed our financial projections by a mile for probably like the first 2.5 years. And it was a 5-year project. So obviously we missed our pro forma by a mile. Now, we did okay because of the fact that we were able to increase the value of the building by the time we sold, but the returns were still not as I projected. So the way that I addressed it, I simply forwent my profits, my share of the profit, and I gave them to the investors. And so that's what happens. That definitely did not go well. I got another one, more recent one, Bronson. And a lot of you guys don't know about this and haven't seen the light of day, but it was a year ago. We took a swing at a really large deal. It would have been by far the largest deal that we would have done, and we really worked it hard for it 9 months. And I won't say exactly where it was. It was somewhere in Texas. And it was really order of magnitude too big, and it really wasn't a great deal. This is the other problem. So we struggled raising the money for it. We tried to go down a private equity path and really got a black eye from it. We lost 6 figures in deposits and due diligence costs that we never got back, right? So again, we don't talk about this a lot. There's a couple examples that I can think of.
Yep. So I think that's really good to hear, because a lot of times it's not just what happens, it's what you learn along the way. And so I think it's good to talk about these stories, because I mean, I have a story of investing. I invested in some options trading strategy, and I know some people, they have all kinds of things. And I was making some fair amount of money. I mean, I'm making 20 grand in a few months doing this, and then I ended up losing about 70 grand. So I realized, I'm probably not the options strategy trading guy. And so, but these are things that you learn, obviously, as an investor, what the right thing is for you. So can you talk to us, maybe, I know there's a couple of recent deals that we've been working with. Maybe you can share a couple more things on that we've things that we're still learning, even though we have a lot of experience, we're still learning, and just things that we're learning along that path.
Yeah, I mean, sure. A lot of these things, I mean, sometimes we inflict our own misery upon ourselves, clearly, right? But a lot of these things are outside of control. For example, we did a deal recently in Huntsville a few months ago, last year. and we got our loan proceeds cut at the 11th hour. And this happens occasionally, and it's really frustrating because we don't really know exactly why it's happened. It happened to us one time. It happened to another syndicator as well. And our loan proceeds got cut from 80% to 65%. That's a pretty big haircut right there. And we're like, oh man, it's not good. So we just said, hey, my gosh, we're gonna close on this thing, and we're just gonna figure it out. Well, we're short like $300,000, $400,000 that we were going to use to improve the property, and we really struggled executing on our business plan because there's no way you're going to get this is a smaller property. There's no way you can get $300,000 or $400,000 out of free cash flow and still make your projections for the investors. So we really, really struggled. So we decided to pay out, the distribution to the investors, but we really weren't executing on our business plan. And in the short term, that's great. Investors are like, oh, great, I'm getting my distributions. But in the long term, it's bad because we're actually not adding value. So at one point, we're like, okay, this has got to stop. We've got to stop distributing cash. But then, of course, that doesn't make the investors happy. So what we decided to do is we decided to corral all the GPs together, and we made a loan. We made a $150,000 loan, $250,000 loan over the next 18 months to recapitalize this asset. And that's exactly what we've done. And so sometimes you just have to do what you got to do to make the project right, and you really got to take care of the investor. That's probably the number one lesson, Bronson, is a lot of these things is really making sure that you satisfy the investor. And if you have to dial back your own profits or own share in some way to do that, we're prepared. That's at least our philosophy, because we build our business, as you know, we get a lot of repeat investors, and they do it because we take care of them. And so if I don't do that and I say I'm going to put this extra money in my pocket, that's great for me right now, but it makes it much more difficult for me to build a business long term. So that's kind of what we've chosen to do, and we can, quote, fix some of the problems in that way to get the project back on track.
Yeah, that's great. Now, real quick, for those that didn't catch it, basically the lender had changed the situation right before close. And so they were requiring, instead of an 80-20 loan to value, it was like 65-35. So it significantly changes. And so, again, that's just stuff that we learned. But I think what Michael shared is true, is that we really try to make sure that our investors are partners. We really put our investors first in this. And this is bigger. We feel like our value is financial freedom for passive investors. So did you want to talk about one more deal? I want to make sure we have enough time for everything.
Yeah, no, I can go on and on. There's always something that goes wrong with a project. But I think we can probably wrap it up, Bronson.
Okay, awesome. So one quote that I love, I have a friend of mine that says this: you live and hopefully you learn. And so kind of like, these are all situations. It's not a given that you're going to learn, but hopefully you learn something. When things go wrong, it's important to reflect on that and see what you learned. So so some key takeaways from this story. Michael, did you want to share a few key takeaways that we can kind of take from this?
Yeah, I love that quote because it says you're living and you're learning, right? And the living is, if you have to accept the fact that you're going to make mistakes, because without it, you don't really live. Well, you live in fear. You never leave the house because you're afraid to make mistakes. So you have to, number one, accept the fact that you're going to make some kind of mistake and just be at peace with it. That's number one. Number two is definitely learn from their mistakes. Right. So what can we do to make sure that our loan proceeds aren't cut anymore? What can we do that we don't bite off more than we can chew? So the worst is not making mistakes, is making the same mistake twice. And I think the other lesson always is, at least philosophically, is always take care of your investors. Right? Or if you have customers, always take care of your customers. It's your customers first, your investors first. And sometimes it's difficult to do because sometimes it comes at your detriment. But we at Nighthawk, Bronson, you and I agree on this, is we really take care of investors. And if we have to cut our profits in some way to do that, then that's what we're going to do. But mistakes are inevitable. Accept them, do the best you can, and learn from them.
That's awesome. Well, Michael, I really appreciate you taking the time to share in this conversation. I think is incredibly valuable. It really shows a lot of people just only share their best stories and their best information. But I think when you start sharing things that have gone wrong, we all learn, we all get better, and obviously we can all learn something from that. So just wanted to speak to everybody listening that thank you for taking the time to watch this video. We have a couple of resources that we've created. Michael's created one at his website, themichaelblank.com/report. It's basically a report that compares the stock market with multifamily investing. And we just an awesome report that kind of goes over some of the things that you need to know about investing in multifamily syndication. Second thing, if you feel like this is for you, you want to get on our investor list, you can go to nighthawkequity.com/join, and that will put you on a call with me, and we will talk about what it would look like to become an investor and be on our list for future deals. So thanks again for taking the time. We look forward to working with you in the future, and we'll see you on the next video.